Welcome to your Monday Mortgage Market Update. I hope you enjoyed your 4th of July holiday. We had a slight rate improvement last week, so this week is going to start just a little bit better than we started last week. Why was that? Well, on Wednesday, we saw the ISM Services Index, and that came in a little bit weaker than what was expected. So what is the ISM Services Index? Well, in layman's terms, it indicates the level of demand for products by measuring the amount of ordering activity that happens at the nation's factories. So as factories are ordering more materials, they need those materials to make more product. More ordering equals more activity equals higher demand equals a stronger economy, and of course a stronger economy equals higher rates. So we want our economy to be strong, but the flip side of that is when the economy is strong like it has been and unemployment numbers are really low, then interest rates go up. Speaking of unemployment numbers, Friday's jobs numbers, they weren't weak, but they represented, and I like this the way I read it best, an obvious downshift compared to last month. In other words, they weren't nearly as strong as they were last month. Now remember, the Fed is watching employment as a trigger for when to lower the Fed funds rate. And while the Fed doesn't control mortgage rates specifically, the markets are watching the Fed, and when the Fed sees interest rates, the Fed funds rate lowered, then they will most likely respond in turn, and we will start to see mortgage rates come down more as well. So what do we expect this week? Well, early week is pretty quiet, not much going on Monday, Tuesday, Wednesday. We do hear some testimony from the Fed chair, but Thursday and Friday are the big days. Thursday, CPI, Friday is PPI. So watch Thursday and Friday for some rate volatility. So where are rates right now? The 30 years at 7.03%, the 15 years at 6.44%, and the FHA 30-year fixed is at 6.50%. Now remember, these are not Weber Mortgages rates. These are national averages from Mortgage News Daily. If you want to know what Weber Mortgages rates are, just pick up the phone and give us a call. Some of you guys, unfortunately, have incurred some consumer debt, and you may be carrying balances on credit cards. Credit card debt is the worst debt that we have here in America because the interest rates are generally astronomical. Well, you might be saying, Michael, I know that there's equity in my house, but I don't want to access it because I have this incredibly low rate on my first mortgage. That's fine. We can help you by giving you what we call a HELOC, which is an acronym for Home Equity Line of Credit. Weber Mortgage can help you get a home equity line of credit to pay off your high interest credit card debt. You can also use something like this to do home renovations or really anything else that you can think of. So if you think you might need to tap into the equity in your home and your rate is so low on the first mortgage that you don't want to get any cash out and have to refinance that, pick up the phone, call Weber Mortgage today. We'll be happy to talk you through what it means to get a HELOC. Weber Mortgage, we are a family in the business of helping families.